Hey everyone, welcome back for another deep dive. Today, um, we're diving into Chicago commercial real estate.
Always exciting.
Right. And we're lucky enough to have some insights from Michael Linton with the Chicago Deal Flow team.
Yeah, Michael's got like almost 40 years of experience as a broker in Chicago, so when Michael speaks, people listen.
He knows what he's talking about.
He does.
And he's got a website, chicagodealflow.com,
That's right.
which I highly recommend if you're interested in this kind of stuff because it's got a ton of great information, and that's actually where we're getting a lot of our insights from today.
Yeah, for this deep dive, we're really hone in on one of his favorite tools, the Mortgage Application Index,
Oh, okay, yeah, the MAI.
or MAI for short.
So that's not just like how many people are applying for mortgages at a certain time, right? Like there's got to be more to it.
You're right. It's much more nuanced than that.
Yeah.
Think of it like as a window into what investors and developers are thinking.
Oh, it's,
You can kind of decipher market confidence, see where the money's flowing, even get a sense of like the overall economic health of Chicago just by looking at this.
so it's like taking the temperature of the market, but like with more data.
Exactly. And what makes the MAI super powerful in a place like Chicago is you can really zero in on these like hyper-local trends.
Okay, so walk me through this. Like, let's say we're looking at the MAI specifically for Chicago. What are we paying attention to?
So first off, you got to look at the volume trends, right? Are the number of applications going up? Are they going down? Are they kind of plateauing? Now, we also have to remember Chicago has its own rhythm, right?
Right.
Like a small dip in applications, let's say in January when it's freezing and no one wants to go outside.
Nobody's doing anything.
Exactly.
Yeah.
That's not necessarily a reason to panic. But if we were to see that trend kind of continue downwards over, several months, that might give us pause.
So it's about understanding the context too, like what's happening in Chicago at that time.
Yes. Now, let's say hypothetically you're interested in a specific neighborhood, right? Let's say Pilsen,
Okay.
which has a really cool art scene, by the way.
Yeah, it's a cool area.
You wouldn't just look at the overall Chicago MAI. You'd want to see, okay, what are the applications doing for properties in Pilsen?
So like if we're seeing a bunch of applications for, say, like multifamily properties in Pilsen, that means people are feeling pretty confident in that area, right?
Right. It could be a sign that Pilsen is really on the up and up, and investors are kind of catching on to that.
And this is where it gets really interesting, right?
Yeah.
Because it's about spotting those trends kind of like ahead of the curve.
Exactly. And another layer to this whole thing is looking at the types of loans being applied for. The MAI actually breaks it down into purchase, refinance, and construction loans.
Okay, so if I'm seeing a ton of, let's say, construction loans for office space in the West Loop, what's that telling me?
That could be a sign that developers are really bullish on Chicago's tech scene. They're anticipating more demand for that kind of space, as these tech companies kind of continue to grow in the city.
So even if there are all these national headlines about like, oh, office space is dead,
Yeah.
this local data from the MAI is saying, hold on, maybe not so fast.
Exactly. It's all about context.
Yeah.
Now let's put ourselves in the shoes of a property owner in River North. They might use the MAI's breakdown of refinance loans to their advantage.
Oh, how so?
So let's say they're seeing a spike in refinance applications for properties similar to theirs in River North.
Okay.
That might be a good time for them to consider refinancing their own property.
Because,
Because this surge in applications could mean that lending conditions are really favorable right now.
oh, so they could get a much better interest rate potentially.
Exactly.
That's huge.
It is, especially with interest rates being all over the place these days.
For sure.
It's like trying to time the market, but for your mortgage.
I like it.
And speaking of timing, Michael really emphasizes how important it is to understand seasonality when you're looking at the MAI for Chicago.
Right. Because winter in Chicago, that's not exactly when the real estate market is booming.
You got it. So if you're seeing a dip in applications, let's say in December in Chicago, it's probably just because it's December.
Yeah, everyone's hibernating.
Exactly. It doesn't necessarily mean the market's about to crash.
Right.
However, if we saw a huge drop in applications in the spring when things should be picking up,
Yeah, that's a little more concerning.
then it might be time to dig a little deeper.
It's like, don't confuse a bad month for a bad year.
Exactly. Now, all of this is to say the MAI is a really valuable tool, but it's not a crystal ball.
Of course not.
You have to look at it within the context of what's happening in Chicago.
It's like connecting the dots between like your gut feeling, your local market knowledge, and what these broader trends are telling you.
Absolutely. And Michael says this is especially important now with this whole thing about non-accrual loans going up in the U.S. banking sector.
Okay, this is where it gets a little worrying, right? Non-accrual loans. That's basically a fancy way of saying potentially bad debt, isn't it?
It can be, yeah. Essentially, it means that some borrowers are having trouble keeping up with their loan payments, and that can make lenders a little nervous.
Right.
So it's not necessarily a sign that Chicago real estate is doomed or anything,
Okay.
but it does make something like the MAI even more useful.
So you're saying it's like an early warning system almost.
Exactly. Let's say, hypothetically, you see mortgage applications for retail properties in the loop they're going down, right? And at the same time, you're hearing about all these non-accrual loans going up in that sector.
Yeah, that would make me a little nervous if I owned a store in the loop.
Right. It could mean that lenders are starting to get a little more hesitant about giving out loans for that type of property.
Because they're worried about the risk.
Exactly. But on the flip side, let's say you see a neighborhood like Hyde Park, and the mortgage application volume there is still looking really good, even with this whole non-accrual loan thing going on.
So that would tell us that Hyde Park is still a pretty safe bet.
Yeah, it suggests that lenders still have confidence in that specific market, that they're not pulling back.
Interesting.
So you're really looking for those areas of strength when everything else feels a bit uncertain. And this is something Michael talks about a lot.
Which is...
Knowledge is power, especially in a market like this.
I feel like knowledge is always power.
It's true, but especially when things are a little shaky.
Yeah, you don't want to be going in blind.
Exactly. And that's what's so great about the MAI. It gives you that data you need to make smart decisions.
Okay, so we've talked about this in a broad sense, but let's bring this down to earth a little bit. Give me some real-world examples. How can different people actually use this information?
Okay, so let's say you're an investor, right? And you've got your eye on this mixed-use property in Uptown.
Which is a pretty hot neighborhood these days.
Yeah, it's definitely up and coming. So first thing you'd want to do is look back at the MAI data for similar properties in Uptown.
So we're looking for a pattern.
Exactly. Has the MAI been steadily climbing? That could be a good sign that demand is increasing. But if it's
Sure.
flatlined, or even worse, if it's been going down.
That's not a good sign.
Not really. It might be a sign to proceed with caution.
It's all about timing.
100%. And remember, timing is everything in real estate.
Yeah,
The MAs can help you figure out if it's a good time to jump in or if you should maybe wait a little bit.
that makes sense.
Yeah.
What about developers? How does this apply to them?
Well, let's imagine a developer is thinking about doing a new condo building in Bronzeville, which, by the way, has seen a ton of new development lately.
It has.
They can use the MAI to see if people actually want to live there.
So if they see a lot of mortgage applications for condos in Bronzeville, that's a good sign.
Right. It means there's probably going to be buyers for those units once they're built.
Less risk.
Exactly. And it's not just about demand, though. Lenders are also more likely to finance projects in areas where they see a strong MAI.
So a healthy MAI basically makes the developer's life a whole lot easier.
Pretty much. And let's not forget about property owners.
Oh, right. They can use this information too.
Totally. Let's say you own a small office building in the Loop, and you're thinking about maybe refinancing.
To get a lower interest rate?
Exactly. The MAI can help you figure out the best time to do that.
Okay, so I'm the office building owner. What am I looking for in the MAI data?
You want to see a jump in refinance applications for similar properties in the Loop? That usually means lenders are eager to make deals.
Because they feel confident in the market.
Yep. But if you see those refinance applications dropping...
That's my cue to maybe hold off for a bit.
Right. It might be a sign that the lenders are getting a little bit nervous.
So basically, the MAI is all about timing and understanding the context.
Nailed it.
This has been so helpful. It's like Michael Linton has given us this whole secret decoder ring for Chicago real estate.
I know, right?
But I'm curious, he talks a lot about looking beyond just the national headlines and really understanding what's happening locally in Chicago. What are some of those local factors that someone should be thinking about when they're looking at the MAI?
Well, Chicago's economy is really diverse when you think about it.
It really is.
Like, we've got the financial district downtown,
Right.
and then you've got, like, Fulton Market with all the tech companies, and then
Yeah.
you go a little bit further south, and it's, like, all industrial.
Yeah, it's like totally different worlds within the same city.
So you could have, like, a situation where office space is struggling nationally, but in Fulton Market, it's, like, booming because all these fintech companies are moving in.
Exactly. So you really can't just look at the national trends and assume it's the same everywhere in Chicago.
It's all about the neighborhood.
It really is. And each neighborhood in Chicago kind of has its own little micro market.
Right. Like, what's happening in Wicker Park is totally different from what's happening in, like, Lincoln Park. 100%.
Yeah.
So, yeah, a strong MAI for Chicago overall is great, but the real juicy insights come from, like, zooming in on those individual neighborhoods.
Right. And then there's all the local rules and regulations that come into play.
Oh, yeah, that's huge.
Like we were talking about opportunity zones earlier.
Right.
Those can have a big impact on where people are investing.
Absolutely. So yeah, you got to factor all of that in.
It's like the MAI is a starting point, but then you have to layer on all these other local factors to really make sense of it.
Exactly. And that's what Michael is so good at. He takes all this complex information and makes it understandable.
Yeah, he's like the MAI whisperer.
I like that.
It's about giving people the tools they need to make smart decisions,
Hmm.
whether they've been doing this for 5 minutes or 50 years.
Totally. Because at the end of the day, knowledge is power.
Couldn't agree more.
Oh.
Well, that was awesome. Thank you so much to Michael Linton and the Chicago Deal Flow team for sharing their expertise.
Yeah, great deep dive.
If you're interested in learning more about Chicago real estate and the MAI specifically, you can check out Michael's website, chicagodealflow.com.
Tons of good stuff on there.
Now, here's a little something to think about until our next deep dive. Let's say you're a developer thinking about building new apartments in a neighborhood that's been rapidly changing. How would you use the MAI along with everything else we talked about today to figure out if now is the right time to make your move? Something to ponder. Until next time.